we were reinvesting every dollar we were making in our real estate and some of our savings back into the business to accelerate our growth. And that allowed us to scale quickly. And you have to be cognizant of, you can scale upwards quickly, you can also scale backwards quickly, depending on how you're underwriting your property.
You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
Hey, welcome to another episode of the AZREIA Show. I am your host, Marcus Maloney, and today we have another excellent episode for you all to engage in and listen to. So we have none other than our executive director, Mike Delprete, here also.
Good morning. Good morning.
All right. So good morning, good afternoon, good evening, wherever whenever you are listening to this podcast. So today, we want to dive in. We want to discuss something that I think will drive home a lot towards a lot of you all that are either just getting started, or if you're doing large multifamily, there's something in here for everyone. So we have Whitney Elkins-Hutton on today, and she is she's the director of investor education at passiveinvesting.com, co-author of the international #1 bestseller, Resilient Women in Life and Business. She's the host of the Passive Investing Made Simple and Multifamily Investor Nation YouTube show and podcast. She is the partner with over 800 million in passive income in real estate, including 6,500 residential units, 7 express car washes. She has flipped over 500 million in residential real estate and have over 2,200 self-storage units. So this is why I say that we can go from just getting started all the way to multifamily to commercial investing. So we have a lot for you on today. So Whitney, how are you doing?
I'm doing great. You just gave me a couple of zeros there on my flipping stats. So it's 5 million in real estate.
5 million. What did I say? 500 million. Okay.
Yeah. But yeah, and then we have 2,200 self-storage. So, but anyways, we're doing fantastic. The sun is shining. It's great. Great.
So tell me, how did you go from, because your background, actually, you wasn't in real estate. You just kind of fell into this, correct?
Yeah, my background's in public health. When I fell into real estate, literally, I was working as a facilitation and training. Well, it's a facilitator, a type of facilitator for the CDC. I was working in bioterrorism. So this is like post 9/11.
Wow.
I was training doctors and nurses how to identify anthrax and smallpox cases, how to train them how to handle biological, radiological, and chemical events. Everything was on the table back then, right? So had me traveling about 80 hours a week, but I had also during this time was able to qualify for a loan and bought a house with a significant other. And that relationship about a month later fell apart. And I had this house. Okay. Didn't know what to do. So I stuffed it full of roommates, completed the rehab myself. Which, guys, in 2002, YouTube didn't exist.
Right.
I had to go get one of those crazy things called a book and teach myself how to do a lot of stuff. Anyways, flipped the house. 11 months later, I panicked. I sold the property. I didn't know what I was doing. And then when I sold it, I was like, holy smokes, I made more money in 11 months doing that than I did at my day job. And I'm like, How many more of these projects could I possibly do? And so we were talking before the show. I'm the type of person that's ready, fire, aim sometimes. And so that's kind of the path I took for several years before I really, it landed with me. Oh, if you want true financial freedom, you need to create cash flow. Yeah. You need to hold on to some of these properties and get other people to pay cash flow above and beyond your expenses. I'm so like, true. Nuts. That took me 10 years to figure out. So anyways, but my husband and I, we built up a portfolio of single family property, still flipping.
Okay, so wait, before we go there, Whitney. So you were in a relationship went south, you had this property, and the first thing you said you stocked it full of roommates, right? So you were house hacking back in 2002, basically.
I was house hacking before it was like in vogue.
How's that?
Yeah, I mean, all these strategies, all these like cool terms that we have for these strategies these days. I mean, they've been around for ages, like a long millennia. Even we just have some really cool strategies, marketing, if you will. When I closed on that property, when I sold it, I was enamored by the check that I got at the closing table. I'm like, awesome. But then when I started calculating my taxes, right, because I had to pay a little bit of capital gains because I held the property less than 12 or 24 months, even though I had to move. I mean, we can go through all of the whole 121 exclusion tax, not loophole, but tax law there. But I'm calculating everything out. I'm like, wait a second, my roommates actually were paying principal, interest, taxes, and insurance for me and utilities. I've been living for free for 11 months. I'm like, oh, I need to do this again. Also, I had borrowed, this was back in the wild, wild west of lending. I was 103% financed on that. I had borrowed money from a family member, actually.
Over leveraged. One of the things I wanted to touch on real quick is
over leveraged, I didn't know it. It was blissful ignorance.
But you turned a problem into profit. And a lot of times as real estate investors, that's what we have to do. We have to identify the problem and turn that problem into a profit. And that's exactly what you did. So kudos to you for saying, okay, you know what, this is a problem. I got to turn this around and see what I need to do in order to let this be a benefit for me.
Absolutely.
Okay, so you was over leveraged, you got this property, you was living free for 11 months, right? And then, something happened. What happened?
Well, I mean, I had already bought my second property because I thought I was cool. Like I got this little real estate thing figured out. So I bought my dream mountain home. Little cabin. I mean, it wasn't like anything frilly or anything like that. Little cabin up in Estes Park. But I had violated every immutable law of real estate. Bad location, wrong timing of the market, didn't understand who, if I decided to rent it out, had no idea who would rent it out. And then I got stuck. In that property for about 2 years,
Okay.
I lost my job about a year later. So, here I am trying to sell it. And somebody gives me a Hail Mary deal, like 3 days into it being listed. And I said, no, I can get more money for this. And I got the same deal 12 months later. So,
oh, wow.
Yeah. But a lot of things went right on that deal and a lot of things went really wrong on that deal. But at the end of the day, even though I wasn't able to cash flow it, I still had a nice equity bump and I still was getting tax benefits on that deal. And so I realized even if I could understand and really truly learn the fundamentals of real estate, location, how to use debt wisely, making sure I'm investing according to like the seven wealth principles, wealth pillars that, have made millionaires and billionaires out of many people in real estate. If I can learn those things, like I'm going to be setting myself up for true generational wealth, not just, kind of a haphazard strategy, like, will I make money or not? Which is unfortunately what a lot of people do is, my story is not, that unheard of. People just kind of stumbling their way into real estate and then trying to kind of learn on the fly. And sometimes they get into a raw deal and then realize afterwards all the things that they did wrong, but they're scared to get into their next deal.
And that's one of the problems that some investors face, is that dichotomy between trying to learn everything, trying to figure everything out before they take that next step, and the ones that, like you said, ready, fire, aim, and then get in over their heads, and then they're scared to do their second deal. But you decided, you said, you know what? I didn't know. I jumped into it. I was ready, fire, aim. You got stuck with this property. Why didn't you stop? Why wasn't that the end of your real estate career? Why did you proceed further?
I just fundamentally knew in my heart, two things. One, that, somebody somewhere, success leaves clues. Somebody somewhere has this all figured out. I just need to tap into that knowledge base and build upon it, right? I need to go copy this. I don't have to go back to school and, get a degree in real estate. Like, regular landlords do this every single day. I'm like, I just need to kind of take a breath, study a little bit, get my feet underneath me, and then move forward. The other thing is I fundamentally knew that, even if it's a patient strategy, like if I could just buy property and figure out how to hang on to it, whether I like actually hit the home run or not on the equity deal, or like made amazing cash flow, that historically, right, past performance doesn't predict future returns, but historically real estate goes up into the right. So I just needed to be patient. And that's what a lot of people don't do, is that, they're not patient. They don't understand that this is a long game. Most of the time. I mean, unfortunately, in the past 3 or 4 years, everybody thinks that's what real estate should be all the time. Like,
right,
20% year over year appreciation, 30% rent increases. That's just not the case.
So what can you share with somebody? Because I'm a slow learner as well. Like those, like you said, 10 years later, you had the aha, right? So I that's my life as well. So but it took a while, especially Marcus and I, we started off the business in wholesaling. So it was, you're around that quick money idea, lump sums of cash all the time. But really, once I accidentally bought some rentals, and then 5 years later, you're like, wow, I could tap into equity and reinvest it. Like, what do you say to someone that's impatient? They're trying to quit their job and they're excited and they just want it to happen. And you need that time for it to really hit and sink in. Like, what do you say to someone? I know you're saying be patient, but what else can we say?
Well, so how I coach people, though, is, really helping them understand their goals. And to get at that goal, you have to ask yourself 3 fundamental questions. Like, what do you want? Why do you want it? And who do you have to become to get it? So what is it that you want, right?
What do you want?
What do you want?
Okay.
Yep. What do you want? And I'll go a little bit deeper here, just briefly, if you'll entertain me, is that gets at the pain, right? The pain. And for people who are impatient, there's probably some sort of pain that's thorn in their side, right? They can't pay out the bills. They can't take the family on vacation. They're stuck in a cubicle. Their boss has them traveling 40, 80 hours a week. Okay. That pain will keep them motivated more so than why do they want something? Because we as human beings, our brain works for us to get us out of pain, right? It does not work for us very well to get us into pleasure.
Right.
Okay. Anyway, as far as the motivator, right? So what do you want? You have to understand, like, what do you want? But so that's the pain, that's the thorn in the side usually for most people. But why do you want it? That's going to get it. We can't just ask the question one time. You have to sit there and like peel back the layers of the onion. And generally somebody's going to arrive at one of 5 freedoms that they want. They either want financial freedom, time freedom, freedom of choice, freedom of location, or freedom of go out in the world and create the impact that they will feel like their purpose, what they were meant to do. And it's the combination of those two. That's what's going to keep people moving forward. Now, when you ask me, like, what do you say to somebody who's impatient? Okay. And that person probably will get themselves in a wrong tactic because they're operating solely off of what they want, and they're not building the business to get them their why in life. Right. So the why is kind of like the North Star. So example, if somebody comes to me and says, I want time freedom. Fantastic. Don't be a wholesaler. Don't go flipping houses. Now that might be a tactic to get you started, but you have to figure out how to take that income, right? That fast money, and put it into the longer projects, take some of those chips off the table over time to where time can work for you in those longer projects, be it your own single family rentals, larger multifamily deals, somebody else's private equity deal. It's not that the fast money is bad, but that's just kind of surface level. You got to dig deeper and understand that why. True. Then the third question is, who do you have to become to get it? What mindset do you need? What skills do you need? What network do you need to have? And that's where you start getting tactical.
Excellent.
So it makes me think, what do you want? Why do you want it? Because you know what? Especially coming through, when you see a lot of new people, which I'm sure you experience, it's always like, hey, what do you want? They're like, okay, I want freedom, and I want passive income. Okay, cool. So why are you here in this class or whatever we're doing? They're like, well, I want to wholesale first, so I'm gonna make a bunch of quick money. Then I'm gonna take that quick money, I'm gonna start flipping, and I'm gonna make bigger money, and then I'm gonna buy my first rental. And I'm just always like, by the time you go through all that, you're probably going to crash and burn like 15 times and probably give up on real estate and think it's not worth it, when you could just buy your rental property next month, in some way. Right. So I could see, like, why do you want it? They have that pain, like they got to pay the bills today. So they think they have to start by wholesaling, because when you think rental property, that's not going to pay your bills, pay your debt off today, So I could see people in that path. I don't know. This is observation.
No, definitely. And that quick money can be addictive, right?
Oh,
Just
yeah.
like every other,
Mhm.
vice out there. And it's the discipline, right? Like, even if you're investing in stocks, bonds, and mutual funds, which, by the way, I don't do anymore, but, it's all about time in the game, not timing the game. And, those quick money tactics, you have to be really good at timing things in order to really really take advantage of them. So, I mean, I talk a lot of times to realtors who are, in feast or famine mode right now. A lot of realtors are struggling. I'm like, okay, so what did you do for the past 3 years to take some of your chips off the table and create passive income for yourself? I mean, you have access to the deals and don't have to pay a commission. Right?
Right.
Did you take advantage of that, right? Like, did you take advantage of some of the pocket deals that you had available to you?
Mhm.
So, but yeah, it's not the 3 questions that I posed are simple. I didn't say it was easy.
Excellent.
So
Excellent.
who do you have to become? Like, so now look, now that you are like, so someone's that's impatient right now listening, and who do they have to become?
Well, that's the internal question, right? If
Yeah.
they're sitting here wholesaling, right, and they're just like, I got to wholesale to make bigger money to go flip, but my why is I want my time back, right? That long-term, financial independence, time freedom. Who do they mentally have to become, with their mindset, with their skills to achieve their why, right? Like, do they need to learn how get a better relationship with money, get a better mindset that it's not all about fast cash, but it is about, steady, long investing. Do they need to, is all they know wholesaling? Do they not understand, how to buy long-term rentals appropriately, or invest in somebody else's deals like private equity, to where they can actually leverage somebody else's time? Those are the type of skills that, they need to kind of like just lay out. Now, it's naming the skills, and then there's actually acquiring the skill. I'm just asking people to name those skills, because, then we get into the real fun stuff that I like working with people on. Is like, do you need to learn the skill, or can you bring somebody into your world that has the skill? Right. And this gets really, for people who own businesses that are just like, I would love to have real estate. I would love to have my own multifamily building, but I just don't have time.
Mm-hmm. So
do you have time to go find somebody? Like,
right. So let's do this real quick. Everybody that's listening, I mean, we got some really, really good information that's already being released to us. Let's take a brief break, hear a word from our sponsors. And then when we come back, Whitney, we want to talk about how you leveraged your equity and start doing something and changing your life and getting out of that rat race of flipping and having single family rentals, and then started investing passively. So let's have a brief break and we'll be right back.
Attention all female investors. AZREIA is excited to announce our good friends are coming to town. Don't miss out on the InvestorCon event in Scottsdale, Arizona on May 18th and 19th. Join us for 2 days of networking, workshops, and keynote speeches from successful female investors. Attend InvestorCon and make valuable connections and gain the confidence you need to take your investing to the next level. Don't wait. Click on the link in the show notes and get more details and the best pricing for InvestorCon in Scottsdale, Arizona on May 18th and 19th, or visit azreia.org/calendar to secure your spot. We can't wait to see you there.
All right, guys, we are back with Whitney, and we were talking about mindset and things of that nature before, but now we want to talk about how she was buying these single family rentals and then converted them into more passive investments. So Whitney, tell us how you started buying all of these single families. We know how you started with the one or two and things like that, but how did you start scaling up?
Yeah, definitely. So, we've had several inflections. When I say we, my husband and I, like on our investing journey. And, we hit a ceiling of achievement. We were flipping and house hacking. We're like, we don't have any cash flow. And one of our friends said, well, why don't you keep one of the rentals and put a tenant in it? And we're like, genius.
Mm-hmm.
We used to be renters ourselves. And, we house hack, we rent to other people. Like, why didn't we think of this? Right. It was one of those
aha moments. Yep.
Palm over the face moments. You're like, oh, is it really that simple? So, so we started off buying a house in our own backyard here in Colorado and put a tenant in it. And we hadn't heard of Bigger Pockets community. I didn't even know how to calculate cash flow. And this is funny, guys. I'm an epidemiologist by training, which means I'm good with numbers. And I had no idea how to calculate cash flow. Like, if you want me to run a regression analysis, I could do it. Cash flow, no idea. So anyways,
I have no idea what you just said you were.
I studied disease movement. So most people were becoming armchair epidemiologists during COVID, right? So
all right.
yeah. So anyways, so we bought this property, put a tenant in it. We're like, okay, we're bringing home positive cash flow every month. And then somebody was like, did you take into account setting aside reserves and CapEx and maintenance and all this? We're like, no. Should we have? So then, my eyes got open. I was like, all right, okay, this thing doesn't actually cash flow, but we knew we had a slam dunk property. And if we needed to exit in a year or two, we could, barring some market disaster. So we then started, trying to understand what markets we were familiar with out of state. So we went to Indianapolis and Kansas City. And so we started picking up some single family property. We initially started with turnkey because I, didn't know how to put together a construction budget. I didn't know how to vet a property manager. I could vet a realtor. That's about the only skill that I thought I had. And anyways, started building out our team that way. And then eventually, we picked up 10 properties with a turnkey provider, 2 different turnkey providers. And then we went to one of them, we could see we were going to be exhausting our capital because, we couldn't pull our capital back out. The properties hadn't appreciated enough after a year or two to be able to extract that capital. And I'm like, okay, can you teach us how to do this birthing where we buy the property, property that needs some love. We rehab the property, put a tenant in it so it has a stream of income on it. And now we refinance it to pull our capital out. Can you teach us how to do that? Because you're doing that and you're selling us the properties. And this is like now 2017 into 18, and there were still a lot of distressed properties on the market. I mean, 16 to 17, a lot of properties to be picked up of, and we could perform this in Indianapolis and Kansas City. So now we had a chunk of money that we were continuing to recycle. Every once in a while, we hit the home run and we were able to pull out more capital than we actually put into the property, which is awesome. But recycling the same bucket of cash to pick up another 20 properties, and all of them cash flowing at this point in time. And I'm not just talking about cash flowing, they make $50. I mean, they were earning, 10 to 12% cash on cash and bringing home, $200 to $300 at least a month after all expenses. Mind you, I now know how to underwrite a property now.
Right.
So they did really well. They didn't just look good on paper. And then we're, again, we kind of had, I mentioned this at the beginning of the show, we had a baby girl during this time. I'm taking care of family members. I'm still working full time. My husband's working full time. Our time is getting more and more squeezed. And as we added, now we're up to 30 single family properties. We're still flipping about 10 times a year just to pile on cash.
Mhm.
And I'm like, we've got two, maybe three full-time jobs between the two of us, right? Maybe four full-time jobs. And I was like, why don't we take advantage of some of this cash flow? We need to start figuring out a way to live our dream, which means we've got to be able to start living off of some of this cash flow.
And
And
that's, I'm sorry, Whitney, just wanted to jump in here real quick.
Mhm.
And it sounds like you guys did it the right way, because some investors, they'll say, okay, well, I got 20, 30 properties. You know what? I can quit my job now, or even before then at 10 properties. Hey, I'm gonna quit my job and live off the cash flow. And then they don't have that cash to reinvest into more properties. But you and your husband decided to stay in your working your 9 to 5 and use that money to just acquire more properties.
Yeah, so we were reinvesting every dollar we were making in our real estate and some of our savings back into the business to accelerate our growth. And that allowed us to scale quickly. And you have to be cognizant of, you can scale upwards quickly. You can also scale backwards quickly, depending on how you're underwriting your property. It cuts both directions. But, to get to the point of how we made that transition, we had the things happening in our life that were forcing us to start stepping into more passive role with some of our property. But we're sitting here, we're going, we've got 30 single family rentals. Maybe we cut out the flipping, or can we diversify our portfolio? And I was like, I am not going to become an expert in self-storage, or, maybe multifamily, that makes sense. And so I doubled down on multifamily, but we wanted to get other exposure in the market. And so it just made sense for us to pick up leverage. And we chose to do that. Either we hired somebody to help us purchase the property, we got a partner and we were the silent partner, or we learned how to invest with other operators who are currently employing this strategy. And so that's what we decided to do. And so it was twofold. One, I became an expert in the multifamily space to continue growing our residential side of the portfolio. But then we started taking chips off the table with the cash flow and the equity we're pulling out of these deals, and starting to diversify our portfolio into self-storage, into express car washes, and other deals like private notes and stuff like that as well. So we can, build out kind of our own mini real estate fund personally, but we don't have to be the experts in everything. The only skill that we have to get extremely good at is underwriting, vetting the operator, the market, and the deal. So that we had to get really good at vetting.
And that's real good, because like you said, you don't necessarily have to go and learn a new skill. You don't need to go in and learn multifamily or self-storage or how to run a car wash. Just find somebody that's already experienced in doing it. Vet that individual and then invest with that individual or that group. And then now you still have your money still turning, and you're diversified across multi-different asset classes versus just single family residences in Kansas City and Indianapolis.
Yeah. And now, because we were able to, find really strong operators, one of the operators, I passiveinvesting.com is one of the reasons why I'm here. I started off as an investor. But now I don't have to become an expert in all of those markets either, right? I'm an expert in my core markets where my controlled property is in Colorado, Arkansas, and Kansas City, but I didn't have to become an expert in the Carolinas, Florida, and Texas as well. So you get multiple leverage, when you learn how to invest in other people's deals. But our core portfolio is what allowed us to do that, because we didn't have high-paying jobs. I mean, we're not lawyers, doctors, tech workers, or anything like that. So for somebody who has a higher and best use in their day job, maybe you're making $200,000 or $350,000 jointly with a spouse or spousal equivalent. Maybe your time is better spent focusing on your day job and taking your chips off the table that way. But for us, we didn't have that. We had to scale up our cash flow a different way.
That's a big thing we run into here at AZREIA. A lot of, like when new people come, you have high income earners. They don't have the time to go to the training classes and the workshops and read the books. And, they just got a lot of responsibilities from their day job. So I like the fact of leveraging and going out to the car washes or investing in other operators. So you mentioned vetting operators. So what are some basics of vetting somebody or finding someone to vet, or how do you get into that world and look for the right people?
Yeah. So if I may, I can offer up a couple of resources to people. Yeah. So I have a free ebook at passiveinvestingwithwhitney.com. You can go there, you can download the ebook. I also do a weekly show called Passive Investing Made Simple, where I help go through all of these questions and different strategies on how to invest as well. So getting people oriented to the space. But just to kind of maybe share just some pearly nuggets right now. First you want to look for and these are your points of leverage, mind you, like somebody who is knowledgeable about the strategy, right? This isn't the time to go if you're a high income earner and you have no time to do anything. This isn't the time to invest with your buddy who's just like, oh man, I read a book on car washes, let's go invest there. No, you want to find the experts in the space, true experts that are doing this. And then you want to look for their track record, right? Like, what have they done? Like, what have they done in business? What have they done in real estate? What has gone really well? What has not gone well? Okay, just because somebody has had a deal go sideways doesn't, for me, it's a flag, but how did they handle that, right? Then you want to, understand what's their ability to get credit and lending, right? That's very important with these type of deals. What is their ability to, pull investor capital and close on the deal? And what, do they have a team behind them? Are they just a one-man show? Are there multiple partners involved? Do they have a team underneath them to help them, search for deals, acquire deals, asset manage the deals? And so there's all levels of scale in there, but for somebody who's in a high income earning position, you have the luxury and leverage to kind of cherry pick who you work with. So you can cherry pick the best of the best and invest with them. But all that is to serve you to get your time back. Now, here's the thing. I ran down a laundry list of points, but what I find about high income earners, generally they're in some sort of upper management role. They're a business owner themselves. Maybe they're a solopreneur. Guess what skill they already have? They know how to vet and hire people.
Yeah.
Mm-hmm.
So a lot of these are translatable skills too. So I try to help people understand that if you're in this position, this isn't as scary as one would make you think it is.
Well, it's a good one.
Yeah.
Cool.
Yeah. You got to use those resources that you already have in order to, pivot into another passive vehicle in order to earn money. So that's very, very great. So Whitney, kind of wrapping up here. So how did you get into, I'm just curious about the car washes. So was there already an operator that was doing the car washes, or was there an operator that was doing multifamily and decided to pivot into car washes? How did you find that operator for the car washes?
Yeah. So, here at passiveinvesting.com, we started building our core portfolio of multifamily real estate. And then we started off in value add real estate. And then, during COVID, we saw, there really was no need to take that risk with the value add risk. So we got into Class A assets. We also added in self-storage to, offer our investors, opportunity to diversify their portfolio within one ecosystem. We also have a first position real estate debt fund. Now, we could see the writing on a wall, like as cap rates continue to compress, cash flow continued to compress during this time on majority on multifamily, but even in the self-storage space, we were keeping our thumb on the pulse with our investors, and we knew that they're chasing yield. So what other tangible investment could we start bringing on board that was really kind of close to the core, right? Like when I talk about a core investment, everybody that lives and breathes needs a roof over their head, right? Multifamily makes sense. But once you get a roof over your head, Americans really love their things. So self-storage makes sense. And guess what? 82% of Americans or there's about own a car, right? So they're going to take oftentimes better care of their car than they are their own property.
True.
And so there's certain fundamentals that are in our favor when it comes to bringing on a high cash flow business like an express car wash. But there's a ton of other things. I mean, this is an industry that's ripe for disruption. It really resembles self-storage back in 2006, 7, and 8. You've got a very fractionalized industry. Less than 15% of current express car wash owners actually own more than 5 locations. And so that tells you that they're all fundamentally in the day-to-day operations of their job. They have zero leverage, right? So if we can take advantage of our buying power and our size as a private equity group, we can come in and start aggregating this portfolio together. Very limited competitors in the space. Most of the people that we compete against are actually doing a franchise model rather than ground up development or direct ownership model, meaning we own the land, we own the brand, we own everything, including the third-party management company for our car washes. We're not doing franchise. We're not introducing that added business risk. But long story short, it gives us an opportunity to continue consolidating the space and grow a portfolio of like 250 to 300 locations and IPO that, or do a large roll up to a REIT before big money gets in the space. Because once there's like a ton of third-party management companies and big money can take out a 100-unit car wash portfolio and place it with whatever third-party management company they want to, the cat's out of the bag.
Right.
So we're in we're right before the hockey stick growth here.
True, because big money, they don't want that inherent risk of trying to manage it and everything like that. They're just looking for an operator that can go in and say, okay, we have the systems, we have the process in place where we can manage a 100-unit, car wash. So yeah, you're right. It's an area and a space ripe for disruption.
Absolutely.
So-
and our investors are attracted to that, because they can still put their money to a good, stable industry. They understand, the customer. We have enough data to understand that it's fairly recession resilient. When times are tough, people don't go buy a new car. They can't afford to buy a new car. They're too scared to. And maybe they can't access financing. So they actually take better care of their cars. And one of the ways they take better care of their cars is that they wash it.
So where's the outside of the third-party management concept, like where's the car wash world going, right? Because I remember car washes. My uncle used to say, here's the bucket and a hose.
You were the car wash, weren't you?
I was the car wash, all right. But then like here in Phoenix, I noticed it was like, then you had the drive-through, and then at the end of the drive-through, everyone would clean it, wipe it down, spray it, clean it, all this stuff, vacuum.
That's a full service car wash.
Full service. And then now it's just like, at least here in Phoenix, it feels like they died down. Now it's the drive-through, you vacuum it yourself and you dry it yourself. I mean, it's still kind of like this cheaper, I guess. I don't know, but like, where is that where it's at? Is that like, I don't even know what my question is. It's just amazing how it feels like you're doing more work for the same price and people are enjoying it though.
Well, okay, so let's talk about that. I mean, when people get in, what makes people engage with it, with businesses, it's customer service and convenience, right? Those are the two main drivers. And so, and I'm going to stick a pin in that for a little bit because, we defined a couple of types of car wash, but let's really define what the express car wash does, right? You've got the DIY, you drive your car into a bay, you drop your quarters in the wall, you got your brush and your hose. If you would just pray your kid doesn't hose you down while they wash the car, right?
Your car's still dirty after you're done.
Yeah, you might be clean.
Right.
Maybe. But the car is still dirty. Then you've got the in-bay automatics. Those are usually attached to a gas station, right? You drive in and those are automatic, but they're not convenient, right? If you're 2 or 3 cars back in line, you got other errands to go do. You're not going to wait 15 minutes to wash your car.
Takes longer.
You swing the other direction, what you were describing, when you pull in, somebody gets out and vacuums your car, puts it through a short tunnel, and they wipe down your car. That's a full service car wash. And so usually that's single pay, right? You got to wait in line to pay. You got to wait in line for your car. You got to wait in line, for somebody to dry off your car. If it's not busy, you might be out in 10, 15 minutes. If it is busy, good luck. You're there for a half hour or longer, right?
Yep, exactly.
There's a collision here, a sweet spot between that full service component and then also, having the convenience of a DI or the automatic car wash is the express tunnel. And so it's really driven on what level of subscription somebody chooses to engage in, right? If you drive in, there might be 30 or 40 bays of vacuums. Okay. If you're on the intro subscription or a $25 a month subscription, you're probably vacuuming your car out yourself. But most locations, at least in ours, you can pay $45 a month and somebody will be there to help you clean out your car. Right.
Oh, cool.
Yeah. Right. Like you get to choose how you engage. Right. And then that car goes through the tunnel. Now that tunnel is pre-washing, washing, undercarriage, waxes, tire shines. It's doing the whole thing and drying your car. Like that all gets done in that tunnel.
Now, a laser light show while you're in the car.
Yeah.
Well, and it's funny that you mentioned that. Like, if you've never been through one of those, I used to put that, draw it out. I have a kid, right? Like I go through one of those car washes. She always wants to go with me because it's entertainment. But like people who if you've never been through one or if you don't have kids that are totally like, enamored by that sort of thing, it doesn't land with them. But yes, there are laser light shows in some of these tunnels. We didn't do this on our locations, but we've heard this and we might do it next year, but do trick or treat in the tunnels because you've got all the laser lights, right? You've got a dark tunnel, go on and house. Right. But anyways, so that's the convenience, and you're paying, so even if you're on an intro, subscription, you're in and out in like 5 minutes. You're not waiting. So you're getting convenience as well as customer service, and you get to choose on how you engage with that. And that is what people are paying for. That's what the customers are paying for. It's like fast food, right? Like, high quality fast food, low quality fast food, right? Like,
I like it. I'm sold. So how much does it cost to invest in one? Like hey, I want to invest in you, Whitney, and send you over some money to be a part of your car wash. Is there like introductory levels or different levels?
As far as like as an investor, so we have minimum investments. And so our typical minimum investment is $100,000, but we're picking these up in portfolios. So generally our portfolios are like 5, 6, 7, a package of deals, 5, 6, 7 deals in one package, a portfolio. And so the benefit is you get to see all the assets in the portfolio. So the market, the deals, you see all the lending, you see all the terms, you see the pro forma, right? All that's visible to you. And you're getting that $100,000 or more is instantly diversified over those markets and those deals. So it just makes sense to, when you're doing that type of investing, to write a little bit larger check.
Okay.
Yep.
You shared it to expand on like kind of some of the returns.
Yeah, sure. Absolutely. Yeah. So we do, I can talk about anything we do. All of our deals are 506C deals.
Okay.
But for us, what we structure our deals at a 10% preferred return. Now, for people who are new to the space, 10% preferred return. I hate the fact that it's called a preferred return because it's not a return at all. It's essentially a hurdle, right? So year one cash flow is probably going to be about 6 to 7%. So there's a difference between that 6 to 7% and 10%. And the way we do our deals is it accumulates, right? So by year 3, we're generally over that 10% preferred return. But any difference there is accumulating over time. Guys, just reach out to me if you're just like, my head just spun around. Reach out to me because this is what I do. This is what I love. I love just demystifying this for people, but sometimes it's hard in like 3 minutes to do that. But yeah, 10% preferred return, 60-40 split to 20% IRR, 40-60 split to 30% IRR. And then one of the biggest differences that we do that other operators don't is we leave our investor uncapped, meaning they continue to earn a return past that 30%. So if we're making money,
Mm.
our investors are making money. And
That's
so,
good.
right now we do a 10/90 split, but, all of our splits, subject to change deal to deal, but our past 6 deals have all been the same.
Perfect.
Awesome.
Perfect. Well, I mean,
Sharing.
we talked about a lot. We talked from single family house hacking all the way to multifamily to car washes, and we barely scraped the surface on self-storage. So Whitney, if somebody wants to get in contact with you to get some more information on how to diversify their assets and portfolio, where can we reach you? Where can we find you?
Absolutely. I like making things simple for people. You can find me at passiveinvestingwithwhitney.com. And that's a subpage on the passiveinvesting.com website, but it's the only place you can get my free ebook and access to my calendar.
All right. So you all know what to do. Go to the website. We'll make sure we have all of that information in the show notes. Whitney, we really appreciate you being here with us. You gave us a lot of information, some good tips from mindset all the way to passively investing. So without any further delay, Mike, do you have anything else you care to share?
Oh, thank you for being here, Whitney. Really enjoyed the conversation. Thank you.
Absolutely. Thank you so much for hosting me.
All right. And you all know what to do every Friday, right, Mike? Every Friday, you can download the
Time,
AZREIA
Marcus.
Show. Huh?
Time, Marcus. What time does the episode come out on Friday?
8 a.m. Every
Yeah.
Friday, 8 a.m. You can download the new episode of the AZREIA Show, hosted by myself, Marcus Maloney, and our executive director, Mike Delprete. You all know what to do. Get out there and enjoy your day.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Mike Delprete. We hope you enjoyed this episode. If you found this information valuable, head over to AZREIA.org and learn more about our community.